Morning. We will pay attention to asset disposal today. It's very important to read the information and ensure that you understand exactly what is said to you, that you don't make mistakes with the calculations, and you must work very systematically so that you do all your asset disposal steps and don't forget to do one of them. In this exercise, they give us the trial balance at the end of 2023. If we look at the dates, the entries are in 2023, so it means that they are giving us the balance at the end of the year. So this 440,000 will not be the opening balance. You first have to read this additional information to determine whether this balance is at the beginning of the year and they haven't recorded anything, or they've recorded all of these entries and then you have to work backwards to get the opening balance, or they only recorded some of the entries. Okay, we are selling this asset on the 1st of April 2023. So all 5 our entries for asset disposal will be on the 1st of April. The cost price of the asset that we sold was 100,000. So that is what we have to remove from our vehicles account. And then they can either give you the accumulated depreciation at the end of the previous year on the asset that you are selling, or they can give you information on the purchase date, and then you have to calculate all the depreciation from the purchase date up to the date that this transaction occurs. In this case, they give us the accumulated depreciation on this asset at the end of the previous year. So the 42,400 or the amount that we've already written off in previous year on the asset that we are selling. We are selling it for 60,000, so this is my sales price. Then there's a new one purchased. Now for the asset disposal, they didn't record anything, but on the new one that was purchased, they say this was already recorded. So it means that this 440 that they gave us is the total at the end of the year after we recorded the additional one that was purchased during the year. So the additional one cost 140,000 and we purchased this on June the 30th. And we paid for it immediately, so the bank was credited. Now I can work backwards to determine what was the opening balance on January the 1st. They haven't recorded anything for asset disposal, so I can just subtract these two and my opening balance will then be 300,000. Okay, they give me the opening balance for accumulated depreciation. So I can start that account on January the 1st with the balance brought down. Okay, now what we have to do is we must record the asset disposal on the 1st of April systematically in the correct order. So it means that I have to calculate depreciation for the current year, because normally we only calculate depreciation at the end of the year. So the first thing that I must update is to get my accumulated depreciation up to date up to the 1st of April when it was sold. Now when you do these calculations, you must work very systematically and divide your page into 3 columns so that it's easy when you do the calculations that you can see which figures you have to use in your ledger. So first of all, I'm going to work out the depreciation on the asset disposal. And this I've used from the 1st of January up to the 1st of April 2023. Okay, they tell me that the cost price is 100,000 and the accumulated depreciation on this asset until the end of the previous year is 42,400. So I will take the cost price and I will subtract the accumulated depreciation because it's diminishing balance. I will work out 20% on that amount, and this vehicle was only used for 3 months in the current year, so that will give me 2,880. So this is my step number 1. So I will debit my depreciation account and I will credit on the date that the transaction occurs. We will credit accumulated depreciation to indicate what is the total amount up to the date that we sell this asset. And we calculated the depreciation as 2,880. The second entry is to take the asset out of our vehicle account because we don't have this vehicle anymore. So I will have to take it out on the credit side. So on April the 1st, I will indicate that I will transfer this asset to asset disposal. Okay, and the cost price of this asset was 100,000. And I will debit my asset disposal account on April the 1st and indicate that this amount was transferred from the vehicle's account, 100,000. So this depreciation is my step number 1. The asset that I remove from my vehicle's account to the asset disposal is step number 2. Now, if we look at the accumulated depreciation, you must remember that the vehicles and the accumulated depreciation is actually one account. But because we have to show in the note what is the cost price and what is the accumulated depreciation as separate figures according to GAAP, it means that I have to keep them separately to make it easier to complete the note. So the vehicles is my positive asset and the accumulated depreciation is my negative asset. So that when I want to decrease my vehicles, I will decrease it on the credit side of the accumulated depreciation to indicate that the value of my vehicle decreased. Okay, now the third step is to determine what is the total depreciation written off on this asset of 100,000. They said that up to the previous year, it was 42,400. We've written off 2,880 in the current year. So that gives me a total amount of 45,280. And that is my step number 3. So I have to remove the accumulated depreciation out of this account and transfer it to the asset disposal. So I will indicate that I transfer the total accumulated depreciation to asset disposal, and we calculated the total amount as 45,280. This is my step number 3, and I will credit asset disposal with the total accumulated depreciation written off until the date that we sell it. Okay, so we can determine what is the carrying amount now, and the carrying amount will then be the cost price less the accumulated depreciation. So in this case, it will be 54,720 if I subtract those two from each other. So if I sell it for more than that 54,720, I will make a profit. If I sell it for less, I will make a loss. And here they tell us that we sold it for 60,000. So step number 4 is to see how much money did I get for this asset. And we received 60,000. So it means we sold it at a higher price than the carrying amount. So I will work out what is the total amount, and then I can subtract the cost price, and I determine that the profit that we made was 5,280. And we will transfer this to profit on sale of asset, and it will be an income that will increase my profits. So I've done all 5 the steps of asset disposal now, and then I still have to do depreciation at the end of the year on the assets that I still have in my use at the end of the year. So I'm first going to calculate it on the old assets. Okay, the old assets we already purchased in previous years, and we used it this year for the full 12 months. Okay, so if I want to calculate the cost price, close the new one and look what is the cost price of the old ones that we're still using. So it's the 300,000 minus the 100,000. That gives me 200,000. Okay, then in the accumulated depreciation, we will balance our accumulated depreciation account to determine how much of this 180 is depreciation on the vehicle with a cost of 200,000. So I will take the 180 plus the 2880 minus the 4520. So to determine what is the accumulated depreciation on the asset that we are still using, I will do a calculation by balancing the accumulated depreciation account. And that will give me 137,600. So if I want to calculate the depreciation on this asset, I will take the 200,000 minus the amount that we've already written off on that asset, and I will multiply this with 20,000 because I've used it for the whole year. And the depreciation on that old asset will then be 12,480. Okay, then we have to do a calculation on the new asset. I bought this new asset on the 30th of June for 140,000, so I can only work out depreciation from the 1st of July up to the end of the year. On the purchase price, we haven't written off depreciation previously, so we don't subtract anything on the new asset. We calculate 20% for it, and this asset was only used for 6 months. So that will give me 14,000. Now these two amounts are both calculated on the last day of the year. So I will add them together and do one entry to show that the depreciation written off on the last day is 26,480. So on December the 31st, we will credit the accumulated depreciation to increase the total amount with 26,480, and we will debit our depreciation account. I've done all the entries now for the asset disposal and the depreciation at the end of the year, so I'm going to balance my vehicles account and determine what is my closing balance at the end of the year. Okay, so the cost price of the assets that we are still using is 340,000, and I will transfer that to the first day of the next financial year, to indicate that we have an asset with a cost price of 340,000. Okay, then I will add up the credit side of the accumulated depreciation account. And I will subtract the debit balance to determine what is the balance in the accumulated depreciation account at the end of the year, because this indicates the total amount that was already written off on the vehicles that I'm still using. And I will bring down that balance on the first day of the next financial year. Now, to do the note, I'm going to use this vehicles and accumulated depreciation account because it makes it much easier when you do that than to try and just sort it out and you don't have a picture in front of you. So it means that I will go to my vehicles and I will say my opening balance was 300,000, the cost price. The accumulated depreciation opening balance was 180,000 rand. And if I subtract that, it gives me 120,000. So the vehicles that we used at the beginning of the year, the carrying amount was 120,000. Then I look at my accumulated depreciation account, and we've written off depreciation on the day when we sold an asset, and we've written off depreciation at the end of the year. So I will add those two together to indicate that's the total depreciation that we've written off during this year, and that will add up to 29,360. Depreciation decreases the value of my asset, so I will show it in brackets. If you don't show the negative figures in brackets, you will not get marks for that. Okay, then there was an addition, and we bought a new vehicle for 140,000. So I must show that my vehicles increase with 140,000. To determine the value of the asset disposal, I will take the cost price that I've removed from my vehicles account, 100,000, and I will take the amount of all the accumulated depreciation on that asset, and I will subtract the 45,280. You can also use your asset disposal account and look at the cost price less the accumulated depreciation. Okay, so this will give me 54,720. That will decrease the value of my asset. Okay, at the end of the year, the value of my vehicle is 340,000. So that is the cost price of the assets that we are still using, and my accumulated depreciation closing balance is 164,080. And I will subtract that, and it will give me the carrying amount at the end of the year as 175,920. So you can check yourself to make sure that you didn't make a mistake. So I will take this 120, subtract the movements during the year, add the addition, and if I do that, I should get the same answer. Otherwise, I made a mistake somewhere. So what is very important with asset disposal, look at the dates very carefully so that you don't do the calculations for the wrong year. Work systematically with your 5 entries that you have to do for asset disposal. Show your calculations very clearly so that it's easy to do this. Good luck for the exams.